Welcome to the Hunt Quarterly Market Update for 31 March 2023. Steve, it seems to me that each quarter when we catch up, there's continued volatility, that there's a rally in the first couple of months of the quarter, and then the markets come off again, and true to form, that's been the case for this quarter. We saw the Australian market and both the international market and equities rally quite strongly in January, only then to come off again in February as central banks around the world continue to increase the cash rates. And then more recently, we saw the collapse of the Silicon Valley Bank in the US and the wobbles that happened with Credit Suisse now being taken over by UBS, which sort of shook out the Australian market. So there's been quite a lot of things sort of happening. We're doing this recording today on the 6th of April. It was only sort of 2 days ago that the RBA in Australia basically have held the cash rate. They haven't increased it again, which was widely kind of anticipated that there would be a pause, but it is forecast that it's going to increase again at the next meeting. So with that context in mind, Steve, how's that sort of translated to the Australian market, and then we might have a look more broadly as to what's happened internationally?
Yeah, let's put up both markets here, Sam. You're absolutely right. You know, you can see Australian international markets have been quite a volatile 12 months, but they basically been tracking each other. As you mentioned, the first month of this quarter, January, the ASX had its strongest return on record, up 6.2%. But it certainly came off, and you can see a dislocation between Australia and the international markets when Silicon Valley Bank collapsed. So the international markets seem to be going on their merry way, but the Australian market has come off a bit. So in the quarter, the Australian market's up 3.6%, positive number,
yes,
but the international markets are up by 9%.
So why that sort of dislocation? If you see that, you know, the Silicon Valley Bank is, you know, a bank in the US has actually collapsed and is now having to be bailed out by the government in America, why hasn't that caused sort of greater shakeout in the States? But in fact, we've seen a bigger drop in Australia.
Yeah, it does seem bizarre. First of all, the Australian banks are the best banks in the world, safest banks in the world. And they certainly didn't go down as much as what the banking sector went down overseas. But over 30% of the Australian market is made up by banks. So when banks go down, it pulls the whole market down. On the other hand, in international markets, banks make up that 11% of that market.
Yeah, so it's not a sort of indicative that there's broader contagion that we saw during the global financial crisis. It's a very different situation. And speaking to friends who work at Credit Suisse, this is it's not unexpected that was going to happen at a point in time.
I think that's right.
Through mismanagement.
Yeah, I think that's right. We should say too, is you look at the last bit of that charts and they're both heading up again.
Yes.
So even though the media calls it a banking crisis, I think it's pretty much past.
So if we now move on to international markets, what have been sort of the key themes for the last quarter and more broadly the last 12 months?
Yeah, so just moving away from the banking sector for a moment, which certainly dominated March. But if you look more broadly across the quarter, the biggest sector has been the high-tech stocks, which have had a phenomenal bounce back. They're up by 18% in the quarter. Now, of course, when you look at last year, they were down by 33%. So this is in some ways a natural bounce back. But it's also got a little bit to do with, you mentioned that the RBA had put rates on pause and we're not sure what the US will do. Everyone feels that we're coming to the end of this interest rate cycle pretty soon. And so the high-tech stocks, which were really battered last year, they're sort of getting value constantly, and I think everyone's got a better idea of how to value them going forward.
And we've certainly seen those positive returns coming back into clients that have a sustainability overlay within their portfolios. Generally, they will have the nasties, so some of the mining sector is stripped out of those portfolios and therefore have a higher weighting towards tech stocks, so they've benefited from that bounce. So Steve, we spent a fair bit of time in the last update around bonds and yields, what had happened to the end of the calendar year, but also to the end of the quarter, 31 December. I think it was the worst return for fixed interest or bonds on record. What's happened this quarter, and what's that meant for 12-month returns for fixed interest?
Yeah, well, at the start of this quarter, things didn't look that rosy either, Sam, with inflation still high and with central banks still saying that there's more work to be done. Yields kept rising in the first bit of this quarter. Yields go up, bond prices go down. But then when Silicon Valley Bank collapsed, in fact, yields fell by the most they have since the GFC. So there was a huge bump up to bond returns. Now those yields fell because the market was pricing in the possibility of a recession in the US, and bonds, of course, are seen as a flight to safety and a flight to quality. So those bond yields plummeted, and it also indicated that perhaps the central banks have done enough work, that the fact that banks are collapsing is not a great sign for the overall economy. So with that, we actually end up with positive returns for the quarter, and that's a welcome relief to people with bonds in the portfolio. You can see both the Australian and the global bonds are up for the quarter. Now over the 12 months, of course, they're still down. There's a little bit of work to be done. But Sam, given that we are reaching the end of that interest rate cycle, we're not really expecting bonds necessarily for bond prices to go down anymore.
Yeah, which is a good thing, and we've certainly seen that within the portfolios that have a larger allocation towards fixed interest, that they benefit from those positive returns for the last quarter, which is terrific.
Yes, absolutely.
So we might just quickly recap on our investment philosophy before looking at the premiums and how they've performed for the quarter and over the 12 months. Certainly the first thing that we do for clients' portfolios is target the equity premiums to try and generate a higher return. We then skew the portfolios to value and small. So looking at those two premiums in the context of the overall markets, how have they performed for the last 12 months?
Well, we mentioned before, Sam, that the high-tech stocks have had this incredible boost up. But over the year, there's still a value premium. In other words, value stocks have done better than growth stocks, both here in Australia and particularly in global markets. There's about a 5% difference between value stocks and growth stocks. So that premium is very positive. Small caps, not so much, particularly here in Australia. The small caps have really been whacked, which typically happens in periods of volatility. So we're seeing a negative small cap premium there over the year, and a very small negative premium in the international markets. International markets, small caps behaving about the same as large caps.
Yes.
But here in Australia, it's quite different. The small caps have done really poorly over the last 12 months.
Yeah, I think just touching on that, in times of volatility and uncertainty, there's a flight away from smaller companies towards sort of larger companies that are perceived to be safer for whatever reason. But when things do change and the sentiment in the market changes, they tend to then have quite a strong run. So yeah, it's just part of the overall cycle of investing that we're seeing.
That's right, and of course it reinforces the WARR Hunt investment philosophy to focus on small caps and value stocks, because we don't know when they'll come in. But as you mentioned, Sam, when small caps rebound, they'll rebound suddenly and strongly. And
yes.
You really want to be ready to capture that. You can't time it, so you need to be set.
Yep. So thank you for those insights, and thank you to all of those watching. Should you wish to discuss your portfolios or any of our investment philosophies, please don't hesitate to contact your advisor. Have a terrific Easter, and thank you for joining us.